Hi, happy 2022. I hope everybody's doing well and had a great holiday season. I want to give you a quick little update here on what happened in 2021, what to look forward to in 2022 when it comes to the economic indicators. COVID, obviously still a challenge. We're fighting through Omicron right now, but the 2021 will go down as a time when with higher inflation, rising inflation. We had supply chain disruptions. And when you have supply chain disruptions, you have a strong demand for goods, which people are out buying goods like crazy. You're going to have higher inflation. With higher inflation, obviously, you're going to have higher interest rates. Also, too, with higher interest rates, we're seeing gas prices through the roof these days. So you've got higher oil prices. So it was a great year in 2021 for most investors. We've seen really solid returns, above average returns based on what expectations are. But going forward to 2022, we're expecting to see returns a bit down. Hopefully, we're going to see equity returns in the 5 to 8% range. So expectations this year should be a little bit lower. We still expect it to be a pretty solid year moving forward. The backdrop obviously is going to be COVID. There's lots of things that are happening right now with Omicron, and hopefully soon it's in the rear view mirror for us moving forward. Growth of the economy. The Bank of Canada is expecting the growth of the country to grow by about 4%, which is actually above their target of 1 to 3%. So strong growth looks great in 2022. Also, too, if you look at North America, Europe, and China, growth in those countries is all going to be in the 4 to 5% range. Now, COVID isn't over. Right now, there's about 44% of the population around the world are fully vaccinated. So it still leaves about 56% of the population that isn't vaccinated. And only 6% of the population in low-income countries is even had one dose. So as a world, we need to get the poorer countries vaccinated so that this can slowly stop. But we do know that there's going to be inflation coming forward. And with inflation, for employers, it means higher cost of wages. That's going to happen in turn with higher wages and higher inflation. Potentially, we're going to see higher interest rates in 2022. So for those that have mortgages coming due and those that have debt, expect to see higher interest rates in 2022. From the equity market, earnings are going to slow down in 2022. That's the projection. Favored sectors in 2022 are going to be things like energy, banks, airlines, restaurants, hopefully as the reopening happens in 22, hotels, and of course there's going to be a big movement to green energy. So there are going to be some areas in 2022 that do well in the stock market. Canada should do well in 2022. US equities are still favorable, obviously. It's a massive economy, and US big technology will drive the engine in 2022 as well. On the fixed income side, as rates go higher, bond returns go down. So those that are in fixed income products expect returns to be a bit less than you've been used to. Most of our portfolios, all of our managed portfolios, have an inflation protection built into it. So when there is inflation, the managers are buying fixed income assets that are inflation protected. In closing, investing is really simple. Number one is to be patient. Number two is to diversify. Number three is to hire really smart people to manage your wealth. Number four is have a game plan. And number five is have a long-term vision. So we're hoping that 2022 will be, again, a successful year for investors. We wish all of you well, health, happiness, prosperity, and again, anything that you need in the next coming months, feel free to reach out to us here at Capital Wealth Management. Have a great day, and we'll see you and talk to you all soon.